I want us to do some calculation today. That insurance policy that you have been using as an investment, and a lot of Kenyans are using insurance policies as investments, and I think this happens all over Africa. They convince you that you're investing money and getting life insurance at the same time, but is it really a good investment? Now let's find out today if it's a good investment for you and if you want to continue doing it. Now, those who don't know about this, let me just give you a background. There are people who use insurance policies as investments, and that's a normal thing actually. Even when you become old, you are always told that if you have a lot of money, you can buy insurance products that can then assure you consistent income until you die. Now, there are so many insurance products out there. I cannot start going into that. I know that some of them are scams when they tell you that you're investing. Now, not only a scam in terms of giving you the wrong information, but again, they're making you lose money for no reason, or you're not making enough money out of your money. Basically, your money is not working for you like it should. But they make it look like they're doing you a big favor and they're giving you lots of money, and people do assume they're getting a lot of money out of it. Now, today, I want to make sure we do this calculation in a proper way and know, are we really making money out of these insurance policies? I don't know how to really call them. They have different names, especially in Kenya. Some have like, I don't know, money back guarantee, cashback guarantee, free life assurance program. They have all manner of policies. So when I was doing my research, I had to speak to people who have done them. So I found it important to talk about it because sometimes you may think that you're getting a lot of returns out of your insurance policy because they're giving you some money. Now, I know there are people who don't know about this one. So yeah, good for you. You don't know about them. Invest in the right products like I always mention. Search through my channel, you'll find lots of products that are important. Very easy, very direct, very simple, right? Number one, before we get into this discussion, I always tell people very simple stuff. Don't get into complex investments that you don't understand and tie yourself for a long time, okay? There are certain investments that you get into, you tie yourself for 20 years, 15 years, 16 years, whatever timeline, yeah? Don't get into a long-term investment in things that you really don't understand, especially as a young person, because you may end up tying your money for a very long time without any considerable returns, or people may end up taking advantage of your naivety or lack of financial literacy education, because all of us, when we grow up, we don't have this education, we don't have this information. So when someone quotes a certain amount of money, you feel good and you're rushing in to invest, or you're feeling good about investing in it, don't do it, okay? They say it's better to take time, think through things instead of rushing into it than regretting later. So always before you commit a lot of money, you commit paying any monthly premiums to anyone, please be sure of what you're going to do. And remember, usually getting out of these investment contracts can be very tricky. So you have to be sure of what kind of investment you're going to do. Otherwise, as usual, here at MoneyMatters, we talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a lifetime of income, basically financial freedom. So guys, let's talk about insurance policies as investments. A lot of people have been doing them. I remember a friend of mine interested me in one when I was in Finland way early, but I didn't get into it. I didn't do more research. I never get into investments blindly. So it sounded really good. He just presented it to me the way it was presented to him. And it was like, okay, there's this insurance policy. I have to, pay premiums. At the end of the period, they're paying me 3, 4 million, 5 million. And he was telling me, oh, my brother has done this and he's now built a nice home. Somebody has done this. I've always been very careful with investments, with money. I'm very good with my money. So I just thought, that sounds really interesting. Because I always know insurance companies can be funny. That's the fact. I have insurance, by the way, but I still know they can be weird, okay? They are really good when they pay out and they have no drama. But especially in Africa, insurance companies are still fleecing people because people do not have the right information. So they not give you all the information. They're salesmen basically trying to fleece you of your money. So in Africa, we have not developed a fully functional insurance system. And it's not because we are backward. No, it's because it's a system that we don't understand as a people. It's just a system that functions on something that is not normal to us. It functions on things like death and stuff. And for us Africans, we never really cared about that. Who cared? When you die, right? So I think there are certain cultural components that have contributed to how we perceive insurance. So sometimes we look at these things on the surface and we say, oh, Europe is too developed, US is too developed, that's why they have better insurance system. No, it's just because these systems are not meant for us. They are not ours. The capitalistic system, the insurance system is not meant for us. So we don't understand it. So our culture sometimes does not approve of certain things, but we have to force it to match with whatever we want to achieve. So sometimes it becomes a conflict of sorts. But of course, people will be looking at it from the surface and thinking you're not developed. No, we had our ways of doing things. Maybe our community was our insurance. Maybe people around you are your insurance. Maybe your family was your insurance. So there was a mode in which we were sure of certain things continuing even after we die. So insurance policies are those policies whereby you are told to pay certain premiums. A premium is the amount of money you pay monthly. So probably you'll be paying 10,000, 5,000. It depends on what the insurance company wants you and what you are able to pay, of course. Britam now has one called Money Back Extra Cash. And Money Back Extra Cash is simply pay a certain amount of money every single month, and you commit to be paying it for a certain period of time. Okay, so you could say I'm gonna be paying you 5,000 Kenya shillings or 10,000 Kenya shillings for 16 years. Okay, every single month you pay them 10,000 Kenya shillings, and they treat it as an investment because they say that your money is gonna be growing, and they do promise a certain percentage on that money. So it could be a minimum of 5, like Britam does say a minimum of 5, but they target 8 to 12. Now, for me, that's such a huge gap. First of all, that's a problem for me. As a finance person, I don't want to invest in something that's telling me there's a chance of 5% and an upper chance of 12%. Chances are the investment company can just manipulate things so that I'm always falling at 5% the minimum, and they're getting all the extra money. And remember, I'm giving you my money every single month. That money I could invest in more stable investments that could give me more guaranteed income for that period of time, and I could make more money. First of all, that's a problem for me. Okay, so I don't know why I would want to invest in that and not invest in a normal investment that would give me better returns. That's one. With this kind of investment, what you do is you pay a certain premium, which they do their calculations on an amortization basis. So you pay a principal amount of money, a premium amount of money every single month for a period of time. And then that amount of money you're paying every month allows you to assure yourself or insure a certain amount of money. Let me explain once again. So the premium you'll be paying is guaranteeing you a certain lump sum. For example, if you are paying 10,000, they could say, okay, based on our calculator, if you pay 10,000 monthly, after 16 years, you will be getting 1.2 million as lump sum. And if something happens to you, you die, you have a permanent life injury, something happens to you, then that money is paid out to whoever it is being paid out to. Paying a premium, that premium allows you to assure a certain amount of money that can be paid out to you in case of death, in case of permanent injury, something like that, okay? The issue number one is their target in terms of returns, their growth. That's the first issue, which I've mentioned. Number two is, the problem is that when people are young and when you're still a young person and someone mentions, oh, if you pay just 10,000 Kenya shillings after this number of years, you're going to get 1.2 million or 1.5 million. You feel like that's a lot of money, but that's nothing. In the larger scheme of things, and in that time period, you can make way more money. And that's something people never think of because human beings just don't naturally put value on time. 10 years is a long time to make money. So 10 years, if you're investing that money, you could make way more. So you're just investing 100 for, let's say, 16 years. You're getting a return of, let's say, 12% because even 11%, which is more, more conservative. And again, 10,000 per month. You will end up with around $49,885, which in Kenya shillings would be, around 5 point something million, almost 6 million, to be honest. Because depending on the exchange rate at the time, 5 point something or up to 6 million it could be. So if you were to invest this money, get compound interest in a very good investment, stable one, 11%, which you can get easily in Kenya or in Africa, generally speaking, you'd make around 5.6 million. So I don't know why I would want to give someone 100 every single month for them to end up paying me just 1.2 million. You end up losing almost 3-4 million on that investment. I think that's a really bad investment, to be honest. That's number one. So for a young person getting into such an investment, there's no need for it. And again, the life insurance they're saying that they do give you, as you can see here, like for example, let's say Britam, Money Back Extra Cash offers attractive combination of life assurance and savings plan, okay? So the benefits they talk about are guaranteed cash bonuses, 20 to 25% paid every 4 to 5 years. I'll talk to you about that. Maturity benefit of 100% of the sum assured. which is what I talked about. So like, for example, if you paying 10,000 every month, you could say that you have 1.2 million at the end of the term, which could be 16 years, 20 years, whatever time you want, yeah? Depending on the calculator, so it's not just about you. So there's a tax benefit to it, which is a good thing for me, tax benefit. But still, even if you tax 4 or 5 million, you still don't get 15% of 4 million or something. You still don't come that low, okay? So whatever it is they tell me, I'm not going with it. Disability benefit, in the event of a total or permanent disability through sickness or accident, the sum assured will be paid in 24 equal monthly installments. That's a good thing. Now, I always say, if you're going for health insurance, it will be much cheaper. So I wouldn't have to pay 10,000 for health insurance. Probably I would have the government one, then I have a private one, which pays way less and would help me offset any kind of, health issues. So, because if I invest that money and get more money, that means if I have health issues, I can also offset it, right? So if I'm going for health insurance, I'm just going for health insurance. I don't want something that is covered in an investment as health insurance. So injury benefit in the event of loss or lame or whatever, they pay some of the money. Now, I would say this thing is not entirely horrible, okay? It's just horrible for young people who are starting to build wealth. If you're someone who has extra cash, you can definitely do this. And usually when I'm doing finance coaching, I have this kind of insurances you need to get, and we talk about that. Life insurance is important if you have people who depend on your income. So that's true. But still, if you invest well, you can still manage to help those people. Okay, so as you can see, it tells you here the monthly premium and everything else. But those are some of the benefits that Britam says in their website. That's just one of them. There are many insurance companies. So I'm just picking on Britam just to show you what happens with regards to this kind of investment. Now, what I'm saying is that there are many ways you can invest this money instead of putting it in this kind of investment. If you do the calculation well of whatever insurance policy you are taking, if you're treating it as an investment, you'll find that you're losing a lot of money, or you're just missing out on really good opportunities and you're going to tie yourself for a long time. Remember, you can't get out before 3 years. You end up losing everything you've contributed, which again is a risk that you would not take with any investment. And your mind can change anytime and you can decide you don't want it, right? You're fixed there. And then if you want to leave, even before the 16 years, they may give you just a part of your money, not all of it. Like I said, the only reason I could take that is because I'm taking an insurance policy, but not an investment. Or it's just a very tiny part of my portfolio and it's just helping me, meet some goals, which is possible. Somebody would want to meet some goals. One thing I haven't mentioned is that they do have a payout period. So you're contributing the premium, you are sure a certain sum of amount at the end of the tenure, your percentage of that amount you have insured, that they do give you every 4 years or 5 years, depending on your agreement. So for example, if you are contributing 10K per month, 16 years or so, like I said earlier, you are insuring a total of 1.2 million. They could give you around 240,000 every 4 years until the maturity of your money. So if they are giving you around 240,000, for example, in that case, you will want to calculate how much that is. So for you to get the total amount, in that case, you want to multiply 10, the 10,000 you're contributing, and see how much you're contributing per year, which will give you around 120,000, I believe. And then you multiply that by 16 years, you get the total money you have contributed the whole time. And then you subtract the 240,000 that they will be giving you every 4 years. Okay. Then at the end of the maturity, they will give you your principal amount, which you are assured, which is 1.2 million, plus the last payout, which is probably 240,000 if you are getting 240. So it just depends on what percentage of your pay, of your assured sum. At the end of the day, if you do the calculation, you still lose. So basically, what I'm trying to say is that you're contributing 10,000 every single month for 12 months. How much will you contribute in 1 year? 120,000 Kenya shillings. And then you want to contribute it for, let's say, 16 years, for example. That will give you, so basically this will give you now 1.9, you will have contributed 1.9 million by the end of this insurance period. So 1.9 million contributed from your pocket, right? They have given you 240,000, which is a percentage of the total assured. So 240 times 4 times, because that goes to 16 years. That's 960,000. So 960,000, that's what they have given you during that period. And then you add that to the assured amount, which is 1.2 million. So that gives you around 2.1 million, okay? 2.1 million, but remember you invested, how much did you invest for the whole period of time? So you're going to get 2.1 million. Remember, record that somewhere, 2.1 million. But remember, how much did you invest? It was 10,000 multiplied by 12 gives you 120,000 multiplied by 16 years gives you 1.9 million. So whichever way you look at it. So guys, let me know if you're investing in these insurance products. If you are, I'll be glad to know your experience and why you got into it. If you know someone who is, please get us more information. Please comment, share, and like as usual. See you next time.
One's a company, two's a crowd, three's a